Small caps, baby, back from the dead. The IWM continues its run. Rotation station again. We're seeing money flowing out of the big boys. IWM still getting some life today. We've got some bank earnings to talk about. Morgan Stanley, Bank of America. Got some, analyst notes to cover as well. We've got T3 coming on today. Adam Mesh will join us at 8:35. We've got a lot to talk about today. Let's go ahead and get pre-market prep started. Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All righty, y'all. Let's go ahead and take a look at the major indices this morning. The S&P 500 trading up about 0.1%, right around those all-time highs. Go over to the Qs. The Qs, I mean, man, as ugly as they looked last Thursday, bounced back on Friday. Yesterday, another. What did we end up with yesterday? We ended up going, moving up higher a little bit yesterday. Still around all-time highs there. The Dow trading up as well. So across the board, let's go to Bitcoin, which crossed above 64,000 yesterday. Did we hold it? No, we are trading slightly below 64,000. You did see a lot of the Bitcoin miners and any Bitcoin related stocks take off yesterday. First time we're back above 63,000 in a few weeks there on Bitcoin. Let's go ahead and bring Dennis in. Dennis, more rotation station. How you doing this morning?
Yeah, lots of rotation. I mean, this has been a stock picker's market. Obviously, since we got the CPI data last week, we've seen small caps straight up, and we've seen tech just take a back seat. Not necessarily going down, but not participating here. NVIDIA's really gone nowhere for 3-4 days. Put in a quiet little triple bottom there, which is interesting on the charts. 127, critical area for that to hold. If you go, looking even SMCI news yesterday, it was going into the NASDAQ 100, I believe, and gave it all back, couldn't hold the gains. So you clearly see this market is moving out of the crowded tech trade. And we don't know if this is going to continue, but it's been 5 days of kind of, moving out of the crowded tech trade and moving into the uncrowded small caps. That's really where the money has went. I mean, Meta's down for the last few days here. Amazon has come off the Bezos 200 major resistance where Bezos just wouldn't stop selling it. The Bezos wall up there of 200. So, is this the start of something new? Like, is this like the next year, 2 years? It's possible the small caps could have a sustained rally here if we actually do start to see interest rates go down. We've talked about this, in the back half of 2024. With potentially interest rate cuts coming, that would be a better environment to get long IWM, to get long some of these other stocks. I don't know if I'm chasing them here, but I think if you get the dips, maybe you're looking to reallocate a little bit of your portfolio to this area.
Yeah, I mean, for the last, 2024, for the last 15 years, Dennis, the best investing strategy, all you needed to do to be a very profitable investor was to be able to type QQQ on your keyboard and click the buy button. Yeah. Does that start changing after 15 years of this bull market in mega cap tech? Maybe. I mean, I think, and we did see, of course, I mean, there have been drawdowns. I mean, you look at Meta's chart here, it's more pronounced on Meta's chart than some of the others, but you had the big drawdown in 2022 where, this came down to 80% or so. Of course, the COVID crash down here, even 2018, you had some weakness, but overall, I mean, let's go over to the Q's chart. It's just been a steady climb. And, now you might finally start seeing some of the big money flowing out of big tech into some of the small caps. And we've talked throughout the last, few months, 6 months or so, about how the small caps are small caps for a reason. They're not as profitable as the big boys. They don't have the same growth rate. Some of them aren't even profitable at all. So I think if you do want to start buying small caps, it's time to be choosy. Find the ones that do have growing revenue. Find the ones that have good balance sheets, and maybe start taking some stabs at them. Some of the IWM stocks that have been outperforming even in the past couple weeks. Upstart has been one that has perked up big time. You look at, just in the last few days, this has gone from around $20 a share to $30 a share. And from the chart perspective, I mean, it looks like it's got some room to go up here, maybe to $37 where you had this previous peak right here. And then if it's kind of the double whammy for Upstart, because if interest rates go down, it not only helps, the stock, it also helps the underlying business because more people will be applying for personal loans.
Oh, yeah. I mean, those business firm Upstart want lower rates. I mean, that's, core of their business, obviously gets hit with rates. So I think there's a lot of businesses here that we're seeing perk up for the simple reason that this market is now pricing in a September rate cut. And we're 2 months out from that. We know this market, we know the stock market does tend to look ahead, even though it's forward looking is often mistaken. But at this time right now, even the bounce back, TLT got hit yesterday, the Trump knockdown on the bonds, bouncing back here this morning. That's a good sign. Then you got the IWM follow through, and it was a good sign that the IWM completely ignored the TLT sell-off yesterday, because I was concerned about that, and continued to go up, and now you're tacking on even more. Now, again, if you're coming in and buying small caps today, they're up 9% in 4 trading sessions. That's probably one of its biggest moves in years. So I don't think it's prudent to just be chasing here and saying, yeah, I got to come in today. I think you got to wait for a pullback here now. There's still bag holders all over the place. I've been an IWM bag holder for a while. I'm obviously making money now, but it hasn't been good. I mean, 3, 4, 5, 6, 7 years really underperformance. So I don't know if anything, I don't know if it just changes on a dime here and that's it. The CPI was good and we're just going to buy small caps and never, and not worry about tech ever again. I still think the investors want tech. I still think eventually tech turns around. I still think you want that as your core. You still want tech to be a big part of your overall portfolio, but maybe you don't want to be 100% tech anymore. So you get a pullback in some of these other stocks. Maybe you start allocating to different stocks, and and maybe this is a conversation to some of your laggard tech stocks, like you were just showing Upstart. What about Intel? What about Intel? I own some Intel in the long-term portfolio. Interesting note from Northland here this morning. The commentary is more interesting than anything because Northland was already positive, but they came out, you're obviously reiterating their buy rating here this morning. They did lower their price target because the stock just hasn't performed, and they were worried about some short-term DRAM pricing and stuff, or not DRAM, but I'm just trying to look at AMD's mixed in with the note. So I was like, I don't know why they're looking, but just commentary from Intel here. Their price target's currently $68, which implies 100% upside. They already had this, so it's not like it's like, boom, they put a 68. This already out there, but they're reiterating it. And they got some interesting comments here, and I'll just read a little bit from it. They're seeing Intel really as the only competition for TSM in the long run. So just, again, reading from it. Investment banking firm reiterates their outperform rating on the stock. We know their target's been out to lunch because it's been way higher than this, based on its belief that the chip maker will ultimately be the only leading edge logic foundry alternative to TSM. I mean, that is interesting, and this has maybe been their bull argument for a while, but, they're coming out and, basically saying this story is still true, even though, the stock hasn't performed as well as we've liked lately, that, if they get these foundries going, we get an alternative to Taiwan Semiconductor. It'd be a hell of a business for Intel. And I mean, and you can look at it and say, well, Intel's only supposed to make $1 this year. So it's trading 35 times earnings. We can do the quick math on that one. That was an easy one. We don't need Joel's math skills for that one. You say, why am I going to pay 35 times for Intel when I pay 35 times for NVIDIA? NVIDIA is about 42 now. Because Intel's at the bottom of its cycle, I would say. These do cycle, these earnings. Intel was making a lot more money before. They're not, killing it by any means. I'm only making $1, but they're also very cyclical. And I think you can see this upside of these earnings. And if they ever get the foundry business going, which is years away, this isn't next week. This is a long ways out. But if you've got a long-term time horizon on Intel, maybe there is a place to just say, hey, this is the forgotten chip stock. And if they can be a competitor to Taiwan Semiconductor, maybe 5 years down the road, this is a lot different story. So I don't think the story is changing imminently. But the other thing I like, and I do a little bit of technicals on my swing trade. I don't do a lot of technicals in the day trading, but the swing trading I do. I like that it paused at 35. If you can zoom in on that chart a little bit more, it's kind of where it on the way down in April. That's where we gapped down from. So it was a likely spot of where we should pause. But now you're getting like consolidation at the pause area, 5 days of consolidation. And if Intel can get above 35.50, you're then in breakout mode from this recent consolidation period, and you start thinking 40s in the card. So I would say above right now, guilty until proven innocent, because resistance is resistance until it's broken. But above 35.50, I'm taking that high from 2 days ago, say $36, starts printing 36, you start thinking, oh, this is off again. This could actually have a similar move to what it just the 30 to 35. And then you start thinking about 40. So I think there's a place where Intel actually could start perking up here again.
Yeah, I don't hate the long-term thesis on Intel here, and especially, I mean, if you're talking about, a duopoly in terms of chip manufacturers between TSM and Intel, which is, the note that you're talking about is basically what that is
Yes,
saying. One potential concern here, and I don't know exactly all the different implications, but we do know that Intel is set to receive billions and billions of dollars from
exactly.
the CHIPS Act and the government. And those are policies passed by the current administration. If the administration
Yeah,
changes, I don't know if some of that money starts to dry up. I mean, I think there's a
good
potential.
point.
There's a potential that the next administration, if which it's expected to change, that Trump keeps some of those chip things, because I think that's popular
It's a
policy
good point.
to be
What if he
onshoring some of
doesn't?
these jobs. Yeah, what if he doesn't? What if he,
That's
so
a great point.
um that's something that's in the air right now. And again, it's not like a certain thing that, oh my God, if Trump wins, all this money dries up and the well runs dry. I mean, we don't know what's going to happen. There might be advisors that say, oh no, this is actually good for American jobs. Those Biden policies, we should keep some of those. Who knows? Just saying that that is one part of the Intel story that I've liked. The fact that when you get subsidies and you get money flowing from the government, that's usually good things for some of these companies, and they're building these plants, and like you said, Dennis, they're kind of years down the road. But either way, Intel down here, I wouldn't mind taking a
You,
stab at it. You
you
look at
can see light at the end of the tunnel, and I can even see from a trading perspective that there's a trade here. So it's two time frames. One, it gets above 36, it starts to get interesting on the breakout. From because we went 30 to 35 consolidation. I like when consolidating right near the highs of the recent move. So you can hate on Intel, and obviously it's been terrible stock, a terrible investment. But if it gets above 36, there's a potential trade there. That's all we're doing on this show. We set up potential trades. I think above 36, it gets interesting. So just keep your eye on it here today, especially with some more commentary from Northland, maybe get some people thinking. So, I may even take a shot. I have some Intel launch portfolio, but I may take a shot on the trading aspect of it here. I'd be stopping myself out at the recent low, which is 33.31, if I was putting that trade on. They want to talk banks, AB. So maybe we should
let's
move
get
over
to
to the
the
banks.
yeah, let's get to the. I mean, that was not on our bingo card to talk Upstart before Bank of America or Morgan Stanley this morning. So I'll take the
That's
blame
all.
on that.
It's all good.
I'll take the blame on that one. Bank of America reported this morning, as someone pointed out in the chat, it might have been Jay Rice, trading at a 52-week high. Now let's go through those numbers this morning. EPS came in at 83 cents, beat the 80-cent estimate. Sales came in at 2.53 billion, beat the 25.2 billion. Why do they call it sales? I mean, it's a bank. I guess, sure, if you want to call it sales. Either way, revenue, sales. So double beat there. You did see, let's see, investment management revenue grow 6.4% in Q2. Looks like nothing in terms of buybacks or guidance or anything like that. But either way, the double beat has the stock trading up this morning and another 2%. $42. I remember when this thing was in like the mid 20s. It feels like not too long ago. $25 at the end of 2023. So in about 8 months' time, this thing has gone from 25 to 41. Still not at the 2022 levels though. And as the market's making new all-time highs, that's interesting to me, finding the stocks that have not, gotten back to their all-time highs.
So remember bank earnings though. These are the hardest earnings stocks to trade because the banks are always wild on their reports. There's fake outs all over the place. They go up, they go down, they go left. No, they can't go left, but they go left and right, I was going to say, but they go up, down, they go all over the place there. Wells Fargo hit on its earnings report, bouncing back. Goldman Sachs initially went up, then got hit, then bounced back. Morgan Stanley this morning, which we'll get to in a second, was up, then it's down now. Bank earnings, impossible to trade. I'll say it right now. I trade the lead ups. I often am long going into those reports. After they report, it's a crapshoot. So I'm not even going to try to predict where Bank of America is going to be here because these earnings, they don't even matter half the time. They always beat AB. They always seem to come out and beat them for the majority of the time. And then sometimes they pop up because the algos just say, oh, beat, we got to buy. And then they're like, it's banks though. And then they sell them back off. So, but Goldman was the opposite yesterday. Goldman had a really good day after the stock was down. So, maybe that was driven by the IWM. Doesn't hurt that small caps, doesn't hurt that, money, doesn't hurt that we're talking about interest rate cuts in September. That's going to help the big banks too, as it's going to help the regionals a lot more, but it's going to help the big banks as well. But, it's all stuff to consider. Bank America will probably be all over the place still on its earnings report. So it's reported. I wouldn't say, I don't know if it's going to go to 44. I don't know if it's going back to 42. Could give it back. It's coin flip territory for me.
I'm kind of mad at Bank of America right now. So if it goes down, good. It deserves it.
Why are you mad?
So I've had this fiasco with my car. It's really my fault. I had a lease on my car and the lease ended like 2 months ago. And I didn't set up my lease end options. And so I'm trying to buy the car outright because I've already put like, $12,000 into it over the past 3 years. And I tried to get a loan from Bank of America and they got approved for the loan. And then they're like, we need the registration and all this stuff. And I'm like, well, it was a lease. I don't have the title. That's what I'm trying to get to buy the car. And they're like, okay, well, we need it for the loan. I'm like, why do you need the title for a loan? So it was this whole ordeal. Finally, I called Toyota Financial yesterday. Let's see how Toyota's doing. Maybe this is the arbitrage. Maybe I go long Toyota, short Bank of America. Toyota was the one that actually helped me. And they were like, all right, well, how about we just extend the lease another 6 months? You can continue paying monthly while you figure out the loan part. And so I did that. And so finally, after a couple months, I got this thing figured out yesterday. But I don't know why Bank of America was making it. I was trying to give them business. I was trying to just take a loan. That's what banks want. They want me to pay that 9% interest rate right now on the car loan. And instead, I went through Toyota. So Bank of America lost my business there. Still a customer, still my checking account. Let's go over to Morgan Stanley, actually another bank that I'm a customer of. Morgan Stanley reported, let's see, EPS $1.82, beat the $1.65 estimate. Sales came in at $15 billion, beat the $14.3 billion estimate. Raises the dividend from 85 cents to 92.5 cents per share. And I mean, I don't know. You get a double beat and you raise the divvy, and the stock still ain't up. What's going on, Dennis?
This is the banks. You could have you could be an insider and actually have the bank earnings in front of you, going to try to trade it. I'm not saying anybody's doing this. I'm just saying you could if you theoretically had that report ahead of time, I don't know what you would do with it. I don't know if you'd buy it or sell it because, again, the earnings come out and half the time they go down on good earnings. Half the time they go up on good earnings, half the time they go down. If they miss, they typically just go down, though. So banks are so hard to trade on earnings. I'm just going to reiterate everything I just said about Bank of America. Even though Morgan Stanley is more of a broker than the bank, we call it a bank now since 2008. It's been called a bank because they merged them all together. Obviously with the financial crisis, they call them all banks. But I think it's just so hard to trade these things. I will say the Goldman dip got bought yesterday. So maybe the Morgan dip gets bought too. I'd be more inclined to buy it than sell it, but I don't usually trade these. The trade on Morgan Stanley was back in April when it had the investigation coming and the stock went down to 85, was down $7 that day. It was absolutely ridiculous for Morgan Stanley to be down that much because these things usually just materialize in a small fine. They don't materialize in anything usually ever significant there. I don't know if we've ever even got the results of what that investigation was all about, but when it went from 92 to 85, that was the buy. Came down there, put a triple bottom even at 85 just for you technical guys, and then it's been up ever since. So I think I'm be more inclined to buy the dip on Morgan Stanley here, But at the same time, I'm probably not trading it because these bank earnings are really hard to trade.
Well, yeah, like I mentioned, I am also a customer of Morgan Stanley. I have my managed investment account there. So I selfishly want them to be trading on inside information, and they, the fines won't be coming out of my personal account. So
You
I
want them
mean,
to do better. They're not
yeah.
doing that, but we
No,
don't
I
think
know.
they're doing that.
No, but there was some, I don't even remember. It was something along those lines. I mean, there's so many different divisions in these big banks that it's like, you have the investment banking divisions, you have the wealth management divisions,
Oh,
which
yeah.
Morgan Stanley is a lot more weighted toward the wealth management part of the business compared to some of the other major banks, which is, again, the part that I am a customer there of. All right, so we got through the bank earnings. Let's check just like the XLF here. I mean,
Well, we
trading.
didn't get through all the bank earnings because there's a regionals that aren't doing that well today. The one that's not doing well is Charles Schwab. So I do want to see what they've done here because this is a pretty good hammering for a broker here. Down $4.22 here in the pre-market there. Talk to us about the Schwab earnings here, AB.
Yeah, so you had the EPS was a slight beat, 73 cents, which beat by 1 cent. You had revenue coming at 4.69 billion, which missed by 10 million. So, the EPS slight beat there, fine, in line, we'll call it, because they only beat by a cent. The revenue came in slightly below estimates. And I mean, I don't know. So did Schwab just integrated with did they have some brokerage like integration this in the past few months, right?
I don't know.
I don't know.
Maybe they had some smaller ones.
Oh yeah, see Robert saying Schwab ruined my trading account is what they did. So they did something, and I don't know if there's maybe some increased costs with whatever integration they did with the brokerage accounts there. But either way, slight miss on the earnings there, but it was pretty much all in line. But I think again, like the bar was probably set a little higher. Stock trading down about 5.5% this morning.
That's a big move down. It's a big move down for Schwab. Spinner's calling me out there. I did say regionals because I was going to go to PNC. I was just going through them all. I was going to go PNC, State Street, the regionals, and then I saw Schwab. I was just going through everything that reported down 5%. So sorry, I called Schwab a regional, and you can't do that. And obviously, Charles Schwab is a lot bigger than a regional, so I wasn't meaning that. It just when you're doing a live show and you're going STT, PNC, and you're going through. I meant to go to the regionals, and I saw Schwab. I'm like, I'm going to Schwab. So it was one that we missed there. So Spinner always keeping me honest there. Down 5%, though. You do have support down here. 69.5 was the low back in April. 69.5 was the low in May. I'm going to call 69.5 on Schwab major support. If Joel Elconin was here, I think you'd give it a 7-star level. So I'm going to call it a 7-star level there, too. I think if you're selling Schwab down, $6 at 69.5, I think you're on the wrong side of the trade. So that's the level I think it could bounce at. I don't know. I haven't watched the pre-market trading if it's bounced there already, but that's a huge level for SCHW.
Yeah, so Schwab, again, you've got that level there, 69.5. You can see here, set to open today around $71 after this thing was as high as 80 just a couple weeks ago. Going over to the regionals, at least looking at the KRE, this thing's actually perking up, Dennis. It closed up nearly 3% yesterday.
Well, why do you think that is, AB?
Interest rates.
Yeah. But there's two sectors that not only want lower rates, they need lower rates. One, solar stocks, which they got trumped yesterday. So that's why you saw the sell-off with them yesterday, but they were moving up. Two, the regional banks. So KRE, the regional banks need lower rates. So they are going to respond the most to a light CPI. And 48 to 54, so not surprising whatsoever. Solar stocks obviously were responding awesomely until they got trumped yesterday. I do wonder if the solar isn't a buy on the pullback, where we can get to that in a second. But coming back here, should we cover some of these other regionals really fast here, AB? PNC, STT, because you were going to the KRE. Well, the KRE is made up of these other ones, and PNC's down, STT's up. Maybe they're not moving enough to care about.
Yeah, I mean, we can rip through them real quick. These, their PNC actually came back a little bit this morning, so you're seeing that trading higher by 0.2%, very light. their earnings. EPS came in at $3.39, missed by 29 cents. Revenue of 5.4 billion, missed by 130 million. But as high as the bar was set for, big bank earnings, the bar was set very low for these regional banks, which have, of course, struggled since the Silicon Valley Bank collapse, since the what is it? First Republic, was that the other one? First Republic, Signature Bank, all those things
Yeah.
back in. What was it? That was March
Year ago.
2020. March 2023, about a year and 4 months ago. And these things just got battered. And that was actually, this has been one of my, I got in and bought some of these banks. Which ones did I come in and buy? Western Alliance, maybe. And then Colin Frost, CFR was another one. And those have been, I thought it was going to be the easiest trade in the world because I was like, oh, the banks that had problems, those are off the board. All these other ones are okay, and they're trading at a 40% discount. These things are going to come right back, and they've kind of been the dogs of my portfolio, even though they have come back slightly. And you've got a decent dividend on some of them, which is nice. But either way, what were the other ones you mentioned besides PNC? Sorry.
STT also reported State Street.
State Street.
And it's trading slightly higher.
Yeah, let's see.
Or they're due to report. Maybe they didn't report yet because it's hardly
trading.
No,
they did. $2.15 beat the $2.03 estimate. Sales came in at around 3.2 billion versus the 3.15 billion. And again, you look at some of these stocks. Okay, State Street's dividend isn't that great, 3.5%. But again, you go to I wonder what Colin Frost is. Colin Frost
CFR.
is about the same, 3.5%.
Yeah.
So, yeah, not crazy dividends. But
these stocks start to look more attractive if we actually start getting rates going down, because I've been worried about the mortgage books there, but you know what? Lower rates fixes all that. So it would fix a lot of problems. So I think on pullbacks here, if we're actually thinking, the Fed is actually going to start lowering rates, and we had Fed commentary yesterday. I forget who it was, but somebody else was saying, yeah, they're starting to look, to interest rate cuts here. It was a Fed official. I saw it go by on my Twitter stream, but I didn't write it down. I should have taken a note of it for the show. But if they're actually thinking about cutting rates September, which it sounds like they are, it sounds like the probabilities are quite high. Where is it? Where is the probability for September now?
Forget September, Dennis. Goldman Sachs says that rate cuts could come as soon as July, which is this month.
What?
I'm not kidding with you, man. Look at this.
What?
I'm not
They're
kidding.
They're going to do it in the summer? Really?
The Fed should cut interest rates at its meeting this month, according to Goldman Sachs.
No way.
I don't know who's saying that at Goldman. Goldman Sachs top economist Jan Hatzius said in a note on Monday that inflation has made enough progress back to the Fed's long-term target of 2% that would warrant a July cut. Using the latest unemployment and inflation numbers, we estimate that the median of the Fed staff's monetary policy rules now implies a funds rate of 4%, well below the actual rate of blah, 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 blah. Either way, they're saying that, but not everyone agrees. You go to the CME watch tool, you're still only seeing an 8.8% chance. Well, but Dennis, I will say, look, a week ago, that was a 4.1% chance. Now
so there's a few people perking up and saying, we got to do it now.
Yeah, that probability has more than doubled in a week. But again, still, more than 90% likely that we will see rates remain steady. But in September, we're not even seeing the current rates on the board. There's a 0% chance that rates stay where they're at, essentially. And yeah, there's a 0.0% chance.
So they're going. So we can confidently say it looks and it appears that we're going to have lower rates in the next 2 months, sometime in the next 2 months. So
according to the data we have, I don't know what else to
starting to price out lower rates. So it's not surprising. All this stuff is a rates play. Even, like the solar stocks, so let's bring it into this here, because it was an ugly day for solar. They definitely got trumped because we know Trump is not clean energy. He's not going to give subsidies to solar companies to try to get, they're not going to, and even the VP that he elected is not like a clean energy person. So I think, obviously Tesla got the pop. Simply because, what just happened?
Retail sales.
Okay.
And the overall market, you're saying?
Yeah, the overall market. Sorry, I didn't know that was coming. I just got picked off bad.
Okay.
Chad, you're supposed to help me on this.
I should have helped you too. Retail sales came in at 0.0% growth for June versus the negative 0.3% estimate. Core retail sales plus 0.4% versus the 0.1%. So the economy's still hot, I guess. The U.S. export price index. Oh, never. Oh, the inflation. This is good for inflation. Export price index dropped. Well, I guess this part's not as great for inflation as the import price index. 0.0 versus 0.2 estimate. For June came in here. I'll zoom this in so you guys can just see exactly what I'm seeing as well. I don't know. Mixed bag, I guess, there. Retail sales stronger than expected. The import and export price index lighter than expected. What are we doing on the overall market? Let's go check.
We got hit a little bit on it. I got bang, 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 bot. And I was like, 830 number. And I wasn't even having it on the radar because usually import sales isn't a market mover here. We dropped a bet. We've come right back up. We're actually going higher now than we were. So actually everything that I just bought was good. Everything I just bought was good.
Mixed
Lucky
bag.
I got picked off.
Oh man, sorry guys. Another ad during numbers, but at least that one wasn't like a CPI. So I didn't have that on my radar that we had some.
Can we move the timing of those ads? Let's bring that up to Benzinga here today and see if we can move the timing of that ad. Like if we can move it even, ideally it would be at 8:35 right before our guest, because then we could pause for our guest, bring the guest on after the ad. We're going to see if we can do that. We're going to see. The YouTube's tricky to work with, but we're sorry about that. We're gonna try it. It is the ads, So we're working on this. We've got it down to one a show. We're gonna try to get that figured out. Sorry about that. But anyways, yeah.
And even worse, Google and YouTube are giving our man Jeff Bezos Domino's ads while he's on a diet. That's not cool, guys. That's not cool. Come on.
Maybe they know Domino's Pizza is coming up. Its earnings are this week here, so they're advertising the stock trading show, and the earnings are coming this week.
There you go. That's some big brain thinking right there, Dennis.
Yeah,
I mean,
maybe
it'll be a Domino's.
Algo's thinking there.
Maybe it'll be a Domino's ad today, a Weight Watchers ad tomorrow. We'll see if they can maybe cancel each other out. But let's go back to clean energy. We're talking JD Vance. JD Vance brings in a lot of money from the oil and gas companies. Definitely not a clean energy guy. He doesn't even think climate change is real, let alone, I know there's debates about the causes of it, but he's, in the past downplayed that. So if you're a clean energy investor, probably not what you necessarily want to see. In addition to just, the overall, election. I know this is not a politics show, but there's some crossover when you're talking about when different administrations will have policies that will impact stocks. I don't think the clean energy market, loves the fact that Trump's chances have been steadily increasing. But getting a little bit of a perk up today. Looks like the TAN ETF is up 1.3% this morning. Dennis, do we have news onto why that is?
It's bouncing back with the TLT. So
Okay.
TLT is bouncing back here. You're seeing a snapback rally from yesterday. So where we were starting to go before I got picked off on basically the world on that which actually worked out at the 830 number.
Uh-oh. Am I frozen? Is Dennis frozen? Someone in the chat help me out. All right. No. Adam Mesh is saying no. No, I am not frozen, or no, Dennis is doing the robot. Okay. Well, let me send Dennis a note that he should Dennis, you froze. All right, it is 8:35 though, so this is actually not the worst timing in the world because we did just have our guest join backstage. It is a Tuesday, which means it is a T3 Tuesday, and today we've got our special guest Adam Mesh hanging out backstage. So without further ado, let's go ahead and give Adam our special pre-market prep welcome and bring him on the show. Well, I don't know what just happened there, Adam, but that was actually good timing that you came in. You helped me out there because I didn't know what was going on. I didn't know if my internet froze and, so whatever. So either way, apologies for that. How are you doing this morning?
Well, I want to know, do I get a producer credit for letting you know that he was frozen and you weren't?
Yes, I will add that to the YouTube description that not only are you today's special guest, but you are today's guest producer as well. You will get your check in about 2 to 3 weeks.
All right, sounds great. Looking for those producer credits so I can
Yeah,
make
there
my
you
own
go.
movie.
The royalties on this stream will be out of this world. So, just wait for that. What have you been watching? What's been top of mind for what have you been trading?
Coming into this call, I was thinking about it, and it's crazy because the last time I was on with you, nothing from what we discussed has changed. Literally, it's all the same stuff. Last time we were talking about how the market just goes up, NVIDIA leads the way, and it's the same thing. The market just goes up. For me, we've gone with the market, putting on credit spreads, collecting premium, doing some diagonal calendars. Our most recent trade we closed half yesterday was actually in what I consider to be one of the more stable, slow-moving stocks right now, which is surprisingly GameStop. It's settled in the 20s. It still pays good premium, and very comfortable to be in. So we sold a credit spread for $1.02. We bought half back for 56 cents. Judging where it's trading right now, we could probably buy the rest back for 20 cents today if we wanted to. Great trade, 1 week, easy, mindless. That's what we're looking for.
Before we get back to the stocks, I got to ask, because this came up last time, I think in the chat, and your first name is Adam. How often do you get told that you kind of sound like Adam Sandler?
Adam Sandler? I don't know. I'll take it though, because he's made a lot of money.
Famous, he's rich. I mean,
Yeah.
Someone in the chat was saying that last time, and once they said it, I couldn't unsee it or hear it. So you're selling credit spreads on GameStop. So you're essentially betting that this isn't going to make any crazy moves right now.
Well, we think it's not going to make any crazy moves down. It's pretty comfortable in the 20s. So we sold the put. We sold the 24-21 spread for July 26th. We collected $1.02. We bought half back for 56 cents, and then the rest is we're letting it ride for a little bit more, but probably buy it back today.
I'm just gonna guess here. I don't know if this holds up the argument, but I feel like you did have some other memester stocks perking up this week. DJT was very volatile yesterday, closing up 31% and trading down in the after hours. Maybe just some memesters and some retail investors that are looking elsewhere for those crazy moves. I know there was one last week. What was it? Zap, that got the whole short squeeze buzz going last week. You look at the volume candles here and the move on Zap. Like maybe it's just like people are like, oh, GameStop. Yeah, we got the Roaring Kitty move. Roaring Kitty hasn't been as active. Maybe they're looking elsewhere, and GameStop's volatility has just kind of moved a little bit. But when the volatility goes, doesn't that start to bring the premiums down as well if you're selling options?
It does, but the volatility hasn't moved down proportionately with the way the stock is settled down.
Got it.
So the expected move, like right now for next week, is still $5 for July 26th. $4.89 is the expected move in GameStop, which is a lot for a $26 stock that isn't moving that much. So they're still playing premiums as if it's like an Amazon, but it's not. It's a lot cheaper. And listen, I'm not fundamentally saying I believe anything in GameStop. I'm just saying it's a stock that's paying good premiums and settled down, so we put a trade on it. We've also traded Palantir, Uber, IWM, fun stocks.
And as far as selling credit spreads, I mean, is this something that's like your typical trading strategy? Are you selling a lot of options? Are you walk me through your typical strategy on a stock? Do you ever just buy a common stock? Are you ever buying options, or is is that kind of your bread and butter?
So individually, I'll own stocks. My audience is an options audience. They want to trade options. For the most part, they don't want to own stocks. That's why we'll do a credit spread instead of just selling a put or selling a call, because they don't really want to take ownership.
Right.
So everything's based around collecting premiums, or sometimes we will buy calls or puts to go for it. But individually, like there's a stock right now, I'll tell you, I've been trading for the last month. That's interesting. ASTS. Alpha Sierra Tango Sierra. Okay. Have you heard about this one?
I have not.
Okay.
ASTS. It's perked up though a lot since May. I mean, you went from $2.50 to $13.50. That's definitely kind of a parabolic move there. How have you been playing this one?
So ASTS is wireless for space. They signed a $100 million contract with Verizon. They signed a $30 million contract with AT&T. And either they work or they don't. So this is a stock where I went for the wheel on it. I sold a put aggressively, looking to take ownership, took ownership, and then started selling calls above it. So in this case, I do own the stock. Right now, I sold the 15 calls out to like August. And it's a small position, but it's been trending up. And I'm like, if this is real, if it's signing these wireless contracts with all these major companies, maybe that 2 to 12 move is legit, and it could be a good thing. I don't know much more about it than that, though.
So if you made money selling the put, then you got in on the stock, and now the stock has gone up. What selling calls? I mean, are you starting to get nervous here at 13.5? I mean, like, wouldn't that cut into your profits selling calls if it does end up getting to that $15 strike price?
Of course, and I'm okay getting taken out. I could either roll it back,
okay,
collect more premium, or just be taken out for a nice profit. I started getting in at 10, so if I get taken out at 15 and I made 50% in a couple months, great. So I don't mind missing out on more upside if that's the case.
Yeah, so you're trading options in a different way than I do, which I'm more the degenerate YOLO all in. I'm either going to make a lot of money or not. You're doing it in like a smarter fashion where you're kind of playing both sides, taking some profits and locking those profits in by doing these different spreads. I mean, how do people in your room and your audience, like, do they follow these trades? Like, are they also playing the options on both sides and kind of doing these more complex strategies?
Yeah, that's why they love the room. We do it on a video. It's a live webinar. I share my screen. We spell it out, and they follow along. And we also keep track of it all on the trade portfolio manager, so they could click on it and see every component of the trade, which is great. By the way, fun fact, Aaron, just because you mentioned it, better than the Adam Sandler thing, I think this one might blow your mind just because you said the word. And you're not going to believe me, but I can prove it. I invented the word YOLO.
You invented the word YOLO?
Yes.
Okay. The first time I heard YOLO, I think, was the Drake song that
came out. That was in 2009. If you look it up, there's a Vanity Fair magazine article and a Rolling Stone magazine article. In 2006, I had my own dating show, and on the show, I said the word YOLO, and I came up with shirts and bracelets.
Really?
So you should be retired off of that. You should have trademarked it. You should have sued Drake. You should have.
When Drake came out with the motto,
royalties for this.
There was YOLO Sportswear in Philadelphia. YOLO owned the clothing copyright. When Drake came out with the motto, I instantly bought YOLO.com. My original trading company was called YOLO before Drake came out with the motto. And then in the Vanity Fair article in Rolling Stone, they're like, Adam Mesh, not Drake, deserves royalties. Just a fun fact.
Yeah.
I really invented the word.
Yeah, we'll fight for you. We'll fight for you here on Benzinga.
You just got some more street cred here in our chat.
Yeah, for sure. YOLO? There's a ticker symbol now, YOLO too. They should be the cannabis. They should be giving you royalties here too. You have royalties everywhere. Like AB says, you can be retired on this.
That's honestly, it's the one thing I missed on is the royalty part. That's why anything else in my life, I'm kind of humble. But when it comes to the word YOLO, which I did not get royalties on,
you're going to
I feel the need to let you know. And Aaron just said the word, and I'm like, he's like, well, I trade more YOLO style. And I'm like, well, I invented YOLO. So
he trades YOLO style. I invented the word YOLO. That's awesome.
What about
Adam Dennis Dick here? I actually, right when your interview was starting, my power went out. But I've been saved by my Generac generator because the power is still up, but the Generac is going. But it's a 30-second outage, and then my stuff's got to reboot. I need to have something to smooth it out. But anyways, I'm back here now. So I did miss the first part of your conversation. So forgive me if I go into some other stuff. But what we were talking before you came on, we were going to talk to solar stocks, but we were just talking the strength in the small caps in general. And obviously you brought us a couple of small cap names here. Do you think this strength in the small caps is sustainable? We're up 9% in basically a week here. Is this the start of the great rotation out of the mega caps into the small caps, or is this just a blip and going to be another selling opportunity for all the small cap bag holders.
Well, Dennis, I think it seems like the market, this isn't me as an analyst, just as a trader, it seems kind of like almost like broken, like a broken game. Like whatever button you hit, it gets stuck for a little bit. And so right now it's on that button. And so they're just buying it up, buy. And then the button will come off and they'll go something else. But it doesn't seem real, if you know what I'm saying. None of these moves seem real. Everything seems like we're living in some crazy world where like, there's just, I don't know. Do you know what I'm saying? Like I said last time we were on, we talked about the same thing, how the market just goes up. Right now, the IWM buy button is on, and you fight the tape with that.
It is. And the moves, like if you're just like a contrarian and saying stock goes up 3%, it's bound to go down tomorrow, it's like there's little pockets. Overall, the market really, seems to be choppy sometimes, but there's pockets of strength and pockets of weakness that just feels like relentless. Like it feels like Nike goes down every day, no matter what. Starbucks has been in the gutter, kind of goes down every day, no matter what. And forever in the first half of the year, we've seen the AI stocks go up no matter what. And now in the last week, it's turned and we're starting to see all these, laggards perk up here. But it does feel right. Like, you think like that IWM move, the first move, we're up $6-7. Like, oh, it's a big move. Let's take some profits. We're up another 10 points in 2 days here. I mean, it's like the algos, you're right, have their algo. I know they don't have fingers. Maybe the humanoids will eventually. But they're just holding down the buy buttons here. When do they release it?
Right. And I found, just like you just said, betting on when they'll release it, betting against what's happening has not been a sound strategy for success. You either go with it or acknowledge that you weren't there for the wedding. You don't want to be there for the funeral, but you don't try to fight it. Do not fight the table. Reminiscence of a stock operator. By the way, real quick, funny story, Dennis, just because you said both words of the keywords. Like a couple of years ago, pre-COVID, I used to have like a video guy follow me around, and I would make like market videos every day. And my friends would like ridicule me when I mispronounced some of the symbols. So the first one was Generac. Like you just said, you had a Generac generator. I went to talk about the stock once, and I think I called it generic or something. Like I just mispronounced a little bit, and they just like loved it for days. And then the other one was, I'm a symbol guy. So like Starbucks, I used to call S-Bucks all the time because I go by the ticker symbols. So Nike, I always called Nike. And as I read it in the symbol, and I was like interviewing Tim Hardaway, the older one, and I said, "Oh, you got the Nike sneakers on." My friend's like, "Nike? What's Nike? It's Nike." And
they hate that.
It's a symbol, and you said Nike. It's funny. Anyway.
Yeah, they hate that.
I had a friend last night tell me he had an interview set up with Palo Alto Networks, and I was like, "Oh, PANW," and he was like, "What are you talking about?"
Right.
I was like, I don't see the companies as their actual names. I just see them as tickers. Like that's all my brain does.
100%.
Slumburger. We always call it Slumburger, SLB. Joel calls it Slumburger, Slob. Some people call it Slob, SLB. Slob, what are you talking about? It's Slumberger. No, it's Slob.
I did see a good question in the chat, Adam, about just your general credit spread strategy. So like Daddy Backstrap, which I don't know what that name means, is asking about, I would love to hear more details about which parameters you look for in terms of delta credit premium. Because you talked about with GameStop that even though some of the volatility has come out of GameStop, the premium still remains high enough that it warrants the trade. How do you like gauge that when you're looking at these different Greeks, if you will?
I mean, the name of the user is interesting. The question is phenomenal.
I think they're talking about maybe like the little backpacks that you put your babies in. Let's go with that because I think
I hope so.
I hope so too.
So I come from the Tom Sosnoff School of Options Trading. I've been interviewing once a month for the last 6-7 years, and he's modified my options game to the next level. So all those questions, specifically when we're putting on trades, we want to go out around 30 to 40 days. 40 days is the optimal time for premium collection. And then in terms of delta, the optimal delta to sell options at is the 30 delta. It's just where the expected move is expected to go to, but not go beyond. So you're like selling on the borders. So 40 days, 30 delta. That's how I take my approach. My service originally, one of my services was called Mesh Delta 30. So we couldn't forget to sell the 30 delta. And if you're buying options, you want to buy away from the 30 delta. either buy the cheap ones for the extended move that could pop up or go at the money. But for selling 30 delta, easy rules to follow.
There you go. Well, we do have this QR code on the screen, Adam, and I know, you're walking your audience through some of these more complex option strategies, ways to rake in some profits in a market, whether stocks are going up or down. Do you want to talk for a second about what, our users will get if they sign up for this room?
Oh yeah. So I have an event today at 1:00 Eastern. I'm back. I hadn't done events like this publicly for a couple of years after I sold my company, but now I'm back doing it, and I'm really excited. It's been going well. The trades have been going well, and if they show up today at 1:00, not only will they see what I do, but they could get a couple of months free access to it, which is cool.
Nice.
All right, y'all. Well, we do have the link in the chat. We've got the QR code on the screen. We've also got the link in the description. Adam, thank you again for hopping on the show today. Thank you for being our guest producer as well as our special guest of the day. This has been an awesome discussion. Love the history lesson there on YOLO and all the
That's
things.
crazy.
Sounds like you've got some great stories. So we'll have to bring you back on sometime to hear more about, your interviews with NBA players, whoever it is. You've got some cool stories, Adam.
I appreciate it. Thank you for having me on. Dennis, glad I could cover for you for a couple of minutes. It was my pleasure.
No, that was huge.
I'll see you next time.
It was perfect timing for the power to go out.
All right, Adam. Have a great
Thanks,
rest of your
Adam.
day. We'll chat soon. All right, Dennis. Well, let's get back, I guess. So we never really finished up on the clean energy.
I keep trying to talk to solar stocks, and then I got interrupted by getting picked off on the 8:30 number, and then I was literally just spitting out solar, and the power went out here.
Maybe this is a sign. Maybe we just need to stay away from solar.
Yeah, I had to stay away. This is telling you, don't talk to solar. Don't talk bullish on solar. You're going to lose all your money. Just stay away. But, okay, so they got trumped yesterday. 100% trumped because we know the clean energy. So you had them rallying. Solar stocks were rallying with the prospects of lower interest rates. They need lower interest rates. Nothing needs them more than solar stocks. But, you've had the big move up. Solar Edge goes from 24 up to 32. Trump yesterday giving back over half the move. I posed the question in the chat. Is this a buying opportunity? Even though we have a potential Trump administration, which is probably not going to be nice to solar stocks. Is this a blip in the radar? Because we don't have a new administration for at least 6 months here now. Do we have a window to buy solar stocks if interest rates are actually going down here? Looking at the beat up ENPH, the beat up SEDG. First Solar is even beat up here now. Do we have a window here? Chat, AB, what do you think?
Yeah, I say go for it. Long term.
AB says yes. I kind of say yes too.
I kind of think. Look at the chart. Look at the chart. I like this consolidation.
You better look at chart than that. It's straight down. How do you get a better looking chart than that?
No.
I like straight down
I like
chart.
the consolidation here.
I
like
know,
the fact
I
that it's found a bottom, that you've had this double bottom here. You've hit around $38 twice. I think long term, you're still going to see, a lot of these solar companies, let's be real, are freaking disasters, whether it's Sunrun. Yep. Some of them are pretty decent. Enphase is decent. Some of them are disasters. But I think long term, and it's not even from like a government DEI type thing. You're just seeing more and more, energy being produced around the world going into clean energy. You're seeing it actually in some places it becomes cheaper to produce clean energy than, at this point, oil and gas and fossil fuels in some places. So I think it's just inevitable that over time we are going to see this more and more. Whether the next administration is as about it or as friendly, we'll see. But I think long term, it depends. I don't, Dennis, you're probably talking about it more of like a trade than I'm talking about more of like a long-term investment. But I feel
like if we're going lower rates, the next 3 months probably set up better for solar stocks. And then you get the Trump dump yesterday on all these things, which maybe just gives you that entry point that you needed. Maybe you don't try to be a hero and pick your poison. Maybe you just drink all the poison in the form of tan. And again, we call them poison because these have been absolutely terrible investments. But here today on this show, I have hated solar stocks for a long time. I think there's a place to do some suntan in here. Put some tan in your portfolio. I'm actually thinking about doing it, not saying long-term. Maybe you're saying long-term, but I'm saying next 3 months. You know, we've obviously, I think the Trump headlines cool off a little bit unless there's another assassination attempt. Or we kind of, are leaning towards the Trump administration, but it doesn't change for 6 months here. I think the market will start focusing on lower rates as opposed to the potential of a change in administration harming them. So I think solar's a buy here.
All right, Dennis. We've got about 5 minutes left. Do I have permission to go on a little mini DDD rant here?
Oh gosh, I'm a little bit scared, but yes, you do.
Okay, so we're talking about Trump. We're talking about clean energy. We got this news yesterday that Elon is going to be donating $45 million a month to Trump's campaign.
Yeah.
I'm not upset about Trump or Elon doing this individually. People on both sides, you have big tech billionaires donating hundreds of millions of dollars to, collectively hundreds of millions of dollars to Democratic nominees. I don't love the whole money in politics thing, from either side. I'll never blame Elon individually because he's just taking advantage of a system that's, been
Sure.
allowed to persist. It's like how a lot of people, like a lot of liberals, will get mad at Trump for doing like some tax stuff. And it's like, okay, well, billionaires have been doing that for years and years and years. And now you're just getting mad because you don't like Trump. It's not about actually Trump doing it. It's the fact that this has been allowed to go on. And there are, people on both sides, conservatives and liberals, that want to repeal the Citizens United court case that allows for this like crazy money in politics. I just do not understand this at all from a business perspective for Tesla, and I'll walk you through why.
Is he saying he's going to use Tesla money or his own money? Because I saw the headline, but I didn't read it.
It's his own money, but of course this is coming from Tesla, and people on Twitter have been saying, what if he used that money on marketing and advertising? Maybe the car sales wouldn't be declining year over year, and instead he's donating it to Trump. I don't even care about that. It's his own money. He can do what he wants, Elon. But
if it's his own money, I'm not as big of an issue. If he's taking Tesla,
no, it is his own money. He's not taking Tesla money and doing it for Trump's campaign. I'm just saying, from the long term, I've been talking about how I love Tesla's energy storage side of the business. I'm bullish Tesla because of that.
Sure.
If you're now which states do you think are more likely to sign contracts for energy storage things? Blue states or red states? It's blue states.
For sure.
If you start pissing off, like if he gets so buddy with Trump, you think like Gavin Newsom or someone like that might hold a grudge and not go with Tesla for something like this? Do you think, by the way, when robo-taxis come out, if states are, mad at Elon because he's going the other direction, if they might not pass regulations as quick enough to legalize the self-driving Teslas or whatever it is? And then the red states, you look at like JD Vance or some of the, politicians down in Texas, they're taking money from the oil and gas industry. They're not going to be that friendly to Tesla. And maybe Elon has talked with Trump behind the scenes about like what he's going to get by donating all this money and getting so buddy, but like, it just does not make sense to me from a business decision. And I don't think it's going to matter in the short term, but I think like 5 years down the road, we could be looking back on it and saying, like, he
burned his bridges. He's burning his bridges to try to build a bridge to an area where he may not get, the approvals anyways, like are the Republican states going to give him approval anyways, and then he's burning his own blue bridges to try to pick up the red bridges. I see where you're going with this, and it's a good argument. I kind of think he's got the blue bridges anyways, and he's just trying to pick up the red bridges too. He's playing a game of Monopoly. He's trying to own all the property. So he wants to get it all. So he's doing, I don't think it hurts if he really believes that Trump, is going to win, which it looks like at this point in time. Obviously, a lot of things can change 5 months from now. But at this point in time, it does look like Trump's going to win.
Yeah.
I don't think it hurts to be on the good side of the president, the next administration.
That's true. And by the way, I found there was this old tweet from, and again, like, not to get, not this is too political. I just thought this was funny. Someone posted this last night on Twitter because I forgot that this happened. This was from 2022. Trump tweeting, when Elon Musk came to the White House asking me for help on all his many subsidized projects, whether it's electric cars that don't drive long enough, driverless cars that crash, or rocket ships to nowhere, without which subsidies he'd be worthless, which that part's true. Tesla would have gone bankrupt without California subsidies, and that's been written about extensively, and telling me how much he was a big Trump fan and Republican, I could have said, drop to your knees and beg, and he would have done it. And now Elon's turning around and donating $45 million a month.
Oh
So
yeah,
I think
times have changed.
times have changed. Now they're friends and now they're getting along. So I think you make a good point,
That's
Dennis,
awesome.
that maybe he's just saying, look, the Trump's going to win anyway.
I need Trump on my side.
Need him on your side. Yeah, that's
He
a good point.
needs all these approval. I mean, again, the biggest hurdle, Gene Munster said it, we've said on this show, the biggest hurdle for robotaxis is going to be regulatory approvals. It's the biggest hurdle. They got it in California, but one state doesn't make a business here. So it's going to be a long road to get regulatory approvals in each state. And that's going to be the biggest issue because, again, let's just say, I got a self-driving car. I'm going to take a trip, from East Coast to West Coast. Well, you can't drive through this state because you're going to get a ticket for that full self-drive. You can't drive through this one. You kind of need all the states. You kind of need everybody on board. It's a tricky thing. And robotaxis are a little ways away here, folks. But, obviously they're going to be able to be operational in a few states, sooner than later. Obviously already operating under Waymo in California. I think, cozying up and, a little bit of love to Trump, that goes a long way. So
but I still think if you look at like a state like Texas and that collectively the legislators in Texas are taking in, hundreds of millions of dollars from like the oil and gas company. A lot of them are headquartered down there in Houston. Like, are those Texas guys going to be like, oh, well, Elon is with Trump, so let's give Tesla this favorable policy? Or will they give it still to the oil and gas companies, which that's, again, my bigger issue. And it's on the left and the right that you have these like big tech billionaires that donate to the politicians, and then they get to make the policies, or they get favorable policies for the hundreds of millions of dollars they're donating. And that's why really over the last 20 years, you've seen companies basically be in charge of policies. And a lot of people, in cities, in rural areas, right, left, white, black, have felt left behind in America, is because hasn't really operated as like a democracy per se, and more of like, hey, which company can buy the politician and donate the most money and then get their favorable policies. And I'm not a fan of that, whether it be, again, and it happens.
What goes on though.
Yeah.
Stock market. Come on. The stock market's built on this,
Let's go ahead and speaking of the stock market, let's go ahead and get back to the stock market and just,
and we're a little bit over time here. So we're going to try to fly through. Shopify gets the upgrade here today, starts to set up a little bit more interesting on the charts as well. I don't know if I'm necessarily chasing it, but on pullbacks here might be interesting. SHOP. That was the one upgrade of note that I had written down. Also, Match. We're just going through quick headlines here because we're out of time. Match Group. We got Starboard taking a position, at least Wall Street Journal reporting that Starboard has taken a position in Match Group. Stock has come off the highs, is trading over 35.5, is back down to 34 here in the pre-market, but that's why it's getting a lift here as well.
There you go. That was your quick headlines that we missed on the end of the day. Again, Shopify trading up 5.5%, Match trading up 6%. I will say the last thing, I was surprised to see Palantir not trading up higher yesterday, because I think Vance is a Thiel guy, and Peter Thiel, the founder of Palantir, backed JD Vance. I mean, maybe some favorable policy as well there, but Palantir trading down 2% after catching a downgrade from Mizuho from neutral to underperform. But I still think, Palantir's chart has looked insane. But we did go over today, 9:03. Joel would not be happy with us if he is watching.
No, he's like 9 o'clock. We're punctual here.
That's the goal. We'll start at 8 a.m., end at 9 a.m. We will be back again tomorrow morning. Our guest tomorrow, let me pull that up real quick. I believe it's Sean Emery, which should be a good segment there from Sean. We've had some good guests this week between Dave Lowry yesterday, of course, Adam Mesh today, Sean Emery tomorrow. So make sure to, guys, come back, tune in with us at 8 a.m. Eastern. You'll see you guys then. Dennis, any final words?
I've so much struggle chasing this market here today. That's why I'm kind of looking for the sectors that were lagging yesterday. So obviously I'm interested in solar. I've talked about all that. Intel is interesting to me. I'm just looking for stuff that kind of is consolidating and hasn't gone, because I just don't want to chase IWM. That's where I'm at right now.
Yeah, and we'll see. I think again, I'm watching the Qs right now, because as much as We've seen a lot of rotation out of big tech and into the IWM. Of course, the Qs perked back up on Friday, closed higher yesterday. And maybe we're in an environment where the Qs can go up with the IWM, and we don't need to see the game of musical chairs where money's going out of one and into the other. But we shall see, of course, as the Fed potentially gets ready to cut interest rates. Some people, Goldman Sachs thinks as soon as July. I don't think so. All right, guys. Again, smash the like. Live trading will start right now. We will see you guys tomorrow morning.